Good morning or good afternoon, depending what time zone you're in, and welcome to today's Ominar. I'm going to ask that everyone please post their questions afterwards or while you go along in the Q&A, and we will take questions afterwards. A recording of this webinar and slides will be posted shortly on our community site afterwards, and later in the day, we will also email a copy to all participants. Briefly about myself, I am the founder and CEO of Multifunding. I write a regular column for Inc. magazine. I have advised former administrations on the small business lending markets. I have a book out called The Growth Dilemma. And for my EO friends out there, I'm a proud EO board member of Philadelphia, but you're not here to learn about me. You're here to learn about the Main Street Lending Program. My lawyers make me say that we are in unprecedented time in history, and the information available to us is changing rapidly. Please refer to our most current presentation for education. The information provided is based upon our best judgment about what we know at this time. However, key questions remain about how to implement the program. Multifunding LLC does not accept any liability as it relates to the timeliness or content of the information we are sharing today or may share in the future, and we are under no legal duty to update any such information or recommendations. We encourage you to check in with your attorneys, CPAs, and financial advisors for additional insight. Some observations. Today, I find so many entrepreneurs are in full survival mode, worried about the future and kind of stuck in their homes and just frankly worried and scared. There's a herd mentality. It's very hard to get out of it. Everyone is focused now on the PPP and the forgiveness. There's fear. Coronavirus is scary. The future is difficult to predict, and this is understandable. And yet, at the same time, at some point as business owners and entrepreneurs, we need to start thinking about what is next. What are our businesses going to look like? We need to start reimagining them. Crisis brings opportunities, and different doors will open. What will make sense for us, and how will we be structured for them? This time is a time in many ways to prepare for battle. And that is, I believe, as entrepreneurs and business owners, our responsibility right now. This involves strategy. What is our strategy going to be going forward? What will our team look like? Who will our key players be? And will we have the cash and resources necessary to stabilize our businesses and help them plan for the future? How much cash will be required to get your business back on a stable footing? What is the best case and the worst case scenario? And where will this cash come from, and how much are you willing to personally risk? These are issues I consider everyone to be thinking about as they go through this presentation. And let's now talk about Main Street. This program has $600 billion allocated for it. It is in effect until September 30th, 2020, and we think the money will go quite quickly. And it has comprised of 3 facilities, new, priority, and expanded, which we'll explain. You won't go to a fintech lender for this money. You'll come to a bank, savings association, or a credit union. In order to be eligible, your business has to be established prior to March 13th, 2020. If you have more than 15,000 employees or more than $5 billion in revenue, you're not eligible. So I'm hoping most people on this phone are. And your business has to be created in the United States with most of your operations in the United States. Businesses that are eligible include a partnership, an LLC, a corporation, an association, a trust, a cooperative, a joint venture with no more than 49% participation by foreign business entities, or a tribal business concern. Ineligible borrowers are developers or landlords in some very specific other industries. Affiliation rules apply how companies are tied together to counting total revenue and employee count. And based on this, we assume that EBITDA and debt is rolled up for affiliated companies as well. Now let's dig into the new and priority facilities. The loan attributes here, these are a secured or unsecured term loan, depending upon the bank. They are a 4-year maturity. Principal and interest payments are deferred for 1 year, and unpaid interest will be capitalized. They are at an adjustable rate of LIBOR on the 1 or 3-month index plus 300 basis points. The minimum loan size is $500,000 and the maximum loan size is $25 million. Prepayment is permitted without penalty, and the fees are 1 to 2% at the outset. What is the new facility of $500,000 to $25 million? How does it work? A lot of the difference between the new and the priority has to do with the lender's rights. On the new, in case of a bankruptcy, the new lender must have the same rights as other lenders except for your mortgage lender. And in the normal course of business, the new lender's rights can be subordinate. It doesn't matter. So if you get one and you have existing lenders, you have to negotiate with them about what happens in bankruptcy. New loans are repaid over first year is interest only, and then there's interest payments second, third, and fourth year, but there are balloon payments of a third at the end of year 2, year 3, and year 4. Take a look, as an example, to the third row here, a company with $500,000 of EBITDA in 2019. They're not to exceed the maximum Main Street loan they could get would be $2 million, 4 times their EBITDA. However, if this company has $1.5 million of existing debt, their potential new money would be $500,000. In a very baseline scenario, a company with $125,000 of 2019 EBITDA and 0 debt could borrow $500,000. Now let's talk about the priorities facility, which is also between $500,000 and $25 million. Basic difference here is that the lender has senior or rights or on par rights with all other lenders except for your mortgage in bankruptcy or in any other scenario. So the lender has more rights under this scenario than under the new facility. And the amortization is a little bit different. It is 15% at the end of year 2, 15% at the end of year 3, and 70% at the end of year 4. So if you take the same company with $500,000 of 2019 EBITDA, they're not to exceed is 6 times that, 6 on these instead of 4. So the maximum they could get is $3 million. But if they already have $1.5 million of existing debt, their potential new money loan would be $1.5 million. On a baseline scenario, if there was a company with 0 debt and they had 2019 EBITDA of $83,000, they could get one of these loans for $500,000. The expanded facility is a little bit different from $10 to $200 million. Just to save you some brain cells, if you don't already have debt of at least $28.5 million, this program's not going to work for you. There's a similar structure with lower origination points than the other facilities. But to take an example, take row 1 here, row 4, a company with $10 million of 2019 EBITDA, their not to exceed would be $60 million. But if they have existing debt of $100 million, they could tag along and get an additional facility of $35 million for that. Now, what are the borrower certification and covenants for all these loans? You cannot use this money to pay the balance of or pay interest on any debt that you currently have until it is paid in full. You cannot use the money to cancel or reduce your commitments to lines of credit with the eligible lender or any other lender. This loan is not designed to have you pay your old debts. It is designed to give you working capital to expand and grow and to recover from this facility. And you need to certify that you have a reasonable basis to believe that you have the ability to meet your financial obligations for at least 90 days and do not expect to file for bankruptcy during this time period. This is not designed to save companies who are on the verge of collapse. You agree to follow compensation rules that I will describe in a minute. But keep in mind that an S corporation or other tax pass-through entity that is an eligible borrower may make distributions to the extent reasonably required to cover your tax obligations in respect to the entity's earnings going forward. So while you have the loan and for 1 year after, you agree not to pay dividends or make other capital distributions with respect to the common stock of your business. For those who earn between $425,000 and $3 million in 2019, you agree to cap your salary or bonuses at that amount for while you have the loan plus 1 year thereafter. If you earn in excess of $3 million, say you earn $6 million, you take half the difference between 3 and 6, which is 1.5. You add that to the 3, and then you agree not to cap your salary at more than 4.5. You agree to make all reasonable efforts to retain your employees while you have the loan. However, keep in mind that the primary purpose of this loan is to save companies, not to save jobs. EBITDA, this is important. Strongly encourage everyone who's very close to get and wants one of these loans to get their 2019 taxes filed. But if you're working with a lender that you have historically worked with, they will calculate the EBITDA the same way they have historically calculated EBITDA for your company. And if you've not worked with this lender before, they will have to calculate your EBITDA the same way that they have historically calculated EBITDA for similar companies like yours. Debt will include existing outstanding and undrawn available debt will include all amounts borrowed under any loan facility, including unsecured or secured loans from any bank, non-bank financial institution or private lender, as well as publicly issued bonds or private placement facilities. If you have an asset-based line that involves lending against accounts receivable and inventory, the debt will include the amount you're able to borrow based on the available collateral, not the total amount that you could borrow in a high-end scenario. How do you pick your right facility? Let's take example number 3, a company with $6 million of EBITDA and existing debt of $15 million. Under the new facility, they could get $9 million. Under the priority, they could get $21 million. And under the expanded, they couldn't get anything. So a lot of it depends upon how much cash you need and what your plans are and what you can negotiate with your lenders. Financing strategy is like playing offense and defense, and you have to think about both. Here are 3 case scenarios to consider. One is a company with a $3 million line of credit and $1 million that is drawn. The line of credit has a personal guarantee. They are planning on getting an MSLP for liquidity. They know that they're going to need some cash going forward to stabilize their company, and they would rather not personally guarantee that capital required to reestablish the business. Another example is a professional services firm whose partners will reduce draws by at least 50% in 2020 to recover from COVID-19. They plan to take an MSLP to spread their income hit over 4 years instead of 1. And example number 3 is a company that has already been approached by several competitors who plan to close shop. They plan to acquire companies at pennies on the dollar and use MSLP money to help. To reiterate this question, how much cash is going to be required to get your business back on a stable footing? What is your best case and worst case scenario? Where will the cash come from, and how much are you willing to personally risk? And what does your future look like? This is the time to be thinking about it. As you plan to hopefully recover and grow, how much cash might you need to fuel those activities? These are the things people need to be thinking about as they think about the MSLP. Now, just to let you know, we are offering help to borrowers who are interested with this program. And now I'm going to open up the question floor to the moderator to take your questions. A reminder to please, if possible, put your questions in the Q&A instead of the chat. And we will take all MSLP questions first, and then certainly if there's time, we will happily entertain PPP or EIDL questions. Thanks, Hannah.
Thank you, Ami. If your only debt is the PPP loan and you want to pursue the priority facility loan option, what would be the process to have the PPP lender to take a second position in the event of a bankruptcy?
Yeah, I think you'll be okay. It's very possible that the majority of your PPP will be forgiven by the time that this lending actually goes through. So I think it's safe to assume that while there's a consideration, it should be fine in time and when things are ready.
Concerning repayment old debt, can you use some proceeds to pay this debt?
You can use it to make your required payments, but you can't use it to pay it down. Now, in some interpretations, you might be able to refinance some of that in the priority facility, and we're waiting for further clarification on that.
I received EIDL funds in sufficient amounts to pay off all my current existing debt and obligations with UCC filings, MCA, and term loans, including my SBA line of credit with Chase, though I believe that is not an eligible use. Should I use that to remove the UCC filings in preparation to apply for the MSLP so the Main Street lender will not have to negotiate with Chase or other lenders? The SBA also just filed UCC for my business yesterday.
Yeah, I would strongly advise that. That is not a legal use of your EIDL. So I would not do that with your EIDL money, and then your situation will have to be reviewed at for the MSLP, considering all your debt in mind.
Is there an option to pay the loan back early for new or priority?
You can prepay at any time without penalty.
For the limitations of compensation, if I made $425K in 2019, could I take up to $3 million in future years without challenging this rule?
No, the maximum is you could take is the 425 unless you're a pass-through tax entity and it's for pass-through basis.
For MSLP, is there a floor for the size of the company?
It has nothing to do with the size of the company. It all has to do with EBITDA and amount of debt.
If the company is in bankruptcy, can they get an MSLP?
I don't think so, but I'm not 100% sure. In fact, I'll take that back. I'm 99.99999% sure they can.
Can a professional service firms use the MSLP to expand?
I don't see any reason why they can't.
Is there any availability for companies with sizable revenue but still loss making on a tax basis, i.e. companies in the advanced startup phase?
No.
Does the calculation of existing debt include the maximum available on our revolver or just the amount of collateral currently available if we are an asset-based borrower?
Just if you're an asset-based borrower, it's tied to the amount of collateral currently available based on your formula. If it's a standard line of credit, it's the maximum amount.
If we have no debt currently, it seems priority is clearly best based on our amortization schedule. Did I get that right?
Absolutely.
What documents banks need to offer for the loan? Do they need audited financials or will agree with in-house generated financials? What if 2018 tax returns are not filed yet? Will the bank accept 3 years prior?
I'm hoping you meant 2019 are not filed yet, and not 2018, but the bank has to look at the EBITDA. If they've worked with you historically, they have to look at your EBITDA the same way they've worked with you historically. And if they have not, they have to look at the EBITDA in a similar way that they've looked at similar companies of yours historically. That's if the tax returns are not done. Still a good idea if you're very close to getting your tax returns done, just to get them filed in line.
What are the total fees and interest rates of these loans going to be?
The initial fees are between 1% and 2%, like the points to get them. And then the rates are LIBOR at the 1 or 3 month, which is about 0.46% right now, plus 3%. So it really depends on how long you hold the loan for.
The previous question, the floor for the size of the company, she meant EBITDA floor.
That depends how much debt you have. So if you have absolutely no debt, the minimum EBITDA required in 2019 is $83,000. And the minimum loan size is $500,000.
And there was a clarification, it was financials of 2018 tax returns have not been filed yet. Will they accept 3 years prior?
I think you're going to have an incredibly difficult time if you haven't filed 2018.
I have one left that's pertaining about PPP. Is that okay?
Sure.
If I have the PPP money, can I add an employee or do I have to keep full-time employees the same as if when we got the money?
Yeah, unfortunately, there's terrible guidance out on the PPP forgiveness. And so I don't feel equipped to answer the question. I wish I was different.
So if we have a pass-through entity S Corp, then we could take up to the amount for ongoing draws up to the 3 million?
I think you can take out for ongoing draws, you can take out whatever is necessary for tax purposes, plus whatever you took out as base salary or compensation in 2019.
If a company has 2 owners, would both owners have to apply for the MSLP together, or can they only apply for one of the MSLPs?
Not tied to the owner, it's tied to the company. So each company can apply for one MSLP, but the owners, that has nothing to do with the owners.
If you receive PPP money and want to apply for the MSLP after you use the PPP money, do you think there will be money remaining to lend?
I don't know how quickly the $600 billion will go. I have no idea, but I think you have to prepare that it will likely go quite quickly.
Is the interest rate fixed for the term or does it float with the LIBOR?
It floats with the LIBOR.
All right, we are finished with questions. I'm just waiting to see. Any more further questions?
If anyone has any additional questions, feel free to reach out via email. I hope everyone's using this opportunity to look forward and think about the future and what the requirements will be to grow and expand their businesses. I think there are a couple more questions that popped up.
Yes. I have existing payment obligations already due prior to COVID and then due in the next 3 months. Can I pay them with the EIDL funds?
I believe that's an acceptable use of EIDL funds.
Will we be able to ask for more from the EIDL?
I don't think so.
Any news on when this will be available?
We're hoping this will come out in the next 2 weeks. And we hope the money will start hitting the street in June.
So the same bank that gave PPP would also do the MSLP?
I don't think nearly as many banks will do the MSLP as PPP. There are something like 6,000 banks participating in PPP. I think maybe 200 banks will do this one.
I have an employee who's on maternity. Can I count them in for the PPP FTE calculations?
Sorry, I don't know.
Are there origination fees for the loans?
Yes, 1 to 2%. Minimum of 1 up to 2.
Is there a list of banks doing MSLP and when will it start?
We're hoping it'll start in the next 2 weeks. There's no list of banks that we're aware of. We are in discussion with some banks that are planning on doing it. We don't think this will be you won't be able to knock on the door of every bank in the country to get one of these. It'll be much more limited.
Maybe you covered this, but does it appear in the guidelines if you got specific aid from PPP, you're not eligible for MSLP?
You're totally eligible. There's nothing, one does not have to do anything with the other.
Do you anticipate that there will be some sort of offset between PPP and local grants, such as New York City Employee Retention Grant that covers part of the payroll?
Sorry, I don't know.
Okay, we are all caught up, Ami.
I appreciate it, everyone. Be well and be safe, and we'll be back online next Tuesday with more. Take care. Bye-bye.
Thank you.